Why the 1st of April should really be your tax year end. The end of the tax year is fast approaching, and with Good Friday falling on the 2nd of April and Easter Monday on the 5th of April, any planning opportunities that you may wish to take advantage should really be carried out. Should really be carried out by the 1st of April. Therefore, in order to avoid disappointment, now is a good time to ensure that you don't miss out on any planning options available to you. Here's a brief overview of what I think you ought to think about. Ensure full use of the income tax personal allowance, which is $12,500 for 2020-21. In some cases, it may be possible to transfer up to 10% of the personal allowance, that's known as the marriage allowance, to your spouse or civil partner, provided neither of you pay income tax at more than the basic rate. Consider whether you should make use of the starting rate band of £5,000 and, of course, the personal savings allowance of £1,000. Basic rate taxpayers and high rate taxpayers. Basic rate taxpayers have £1,000 and high rate taxpayers £500 of savings income tax free. Aim to use the dividend allowance of £2,000 where possible, and of course consider maximising any ISA contributions or junior ISA contributions. The current subscription limits are £20,000 for ISA and £9,000 for the junior ISA. Maximise pension contributions and consider whether you can benefit from any carry forward rules which allow unused annual allowances to be carried forward for a maximum of 3 tax years. This means that the 5th of April is the last opportunity to use unused allowance of up to £40,000 from 2017-18. Consider use of capital gains tax annual exemption of $12,300. If this exemption is not used, it's lost. So it is worth thinking about whether you have any investments that can make use of this exemption. Remembering current year losses must be offset against current year gains. Make use of any inheritance tax exemptions, for example, the £3,000 annual exemption, and you can use last year's annual exemption if unused. So you can carry that forward. The small gifts exemption of £250, and also make use of normal expenditure out of income. Depending on your risk profile, you could consider investing in new ordinary enterprise investment scheme shares or venture capitalist trusts, which obtain income tax relief at 30%. They're pretty high risk products, in my opinion, so really do get specialist advice if you're going to get into that area of the world. For more information, please find a link below for our free tax year end planning checklist for individuals. This is Justin King, helping you be more informed around money and living a more successful life.